Well, hello everybody. Welcome to P.B.M. Money. Today, I want to talk about the tale of two strategies. Yes, that is a takeoff of a famous novel. But I want to talk about the change in strategies that we are taking in the stock market right now. Now I want to back up and kind of start at the beginning. Excuse me. We got into the stock market about 5 months ago. And for those of you that don't know, my degree is in business, so I have a little bit of an understanding. I've dealt with the stock market before, so I have a clue of what's going on. But when I jumped in, first off, I found Robinhood, which was awesome. I'm not being paid or sponsored by Robinhood at all. I'm just saying. So we could do trades that didn't cost anything, and that's a big change from when I was in the last time. But when I got in there, I was expecting to do a certain thing, and then when I started looking at charts and companies, and I realized there was an outstanding opportunity standing right in front of me. So after doing about, I don't know, 30 days of really intense investigation, I changed my view. And so what I started doing, well, first off, the one thing I didn't change is I'm still doing dollar cost averaging. Now I do have, by the grace of God, I have some cash that I could have gone all in with this strategy. I chose not to. I wanted to go dollar cost averaging. Now here's the opportunity that I saw. No matter what the business, no matter anything else, on March 13th, 2020, everybody's bottom line went straight in the toilet. Now, the amount of time it took to recover depends on the industry. But I realized quite quickly when I started looking at that as they recover, their stocks will recover with them. So I went through and I mean it, I looked at a lot of different stocks, and I was looking for some specific things. Did their stocks go down dramatically? Not just down, but down dramatically on March 13th? If the answer was yes, what was their pre-pandemic stock price? Because we can assume that at some point in the future, they're going to get back to where they were. So let's say their stock was $30 a share pre-pandemic and it fell to $9 a share. Well, we can assume that at some point down the future that they will be back to $30. Well, excuse me, but that's $21 a share increase. That's an opportunity. So I went through and I looked for some of these, and I found a lot. And so, but I didn't want to go all in. I wanted to do dollar cost averaging. So month after month, I found a different one. I did my research, found one I was comfortable with, and made a purchase. Now, after, I don't know, maybe 3 months, I noticed that the profits were starting to come in pretty quick. And I thought, okay, do I leave the profits there for them to multiply? Do I take them out and put them in cash? Do I take them out and put them on my savings account? Or do I take them out and put them in a place where professionals can manage my money? and I really wasn't sure. So what I did is I found a rock solid blue chip stock. So let's say I had 3 shares of stock that had $100 in profit. All right. So I sold $100 of all 3 shares. I now had $300 in cash. I took that $300 and I would buy a blue chip stock. Now, why did I buy blue chip? It's not because of the dividend, which is not a bad thing. I mean, they usually pay a little bit of a dividend. It's not because they were going to go up, because blue chips don't do that. And that's why I bought them. It's just a good, stable way to hold your money, stay online, and have the cash available to go buy other deals. So the first time we did that, we took out about $1,000 in profit after about 3 months, and we only had probably $3,000, maybe $4,000. So we did very well. And even to date, 5 or 6 months later, we are still running at 34%. So we're doing very well. So we took the profit and we put them in our blue chip account, and then I couldn't decide, should I leave it there in the mutual fund or in the blue chip, or should I take it out? And I thought, okay, so if the market totally tanks, the blue chip is going to go down, and depending on the blue chip, it could go down quite a bit. So all of the profit that I made might go away. So here's what I did. I took the majority of the cash out of the blue chip and I put it into a mutual fund. Why did I do that? Well, because first off, mutual fund has professional managers, and the one that I'm in, I've been in for years, and they've done very well. It is a zero charge mutual fund, and they do very well. So I took that money out, put it into the mutual fund, and now we had a little bit in there. Now, one of the things that I determined I wanted to do with the profits is I wanted to be just like a business. I wanted to take some of that profit and put it into another stock. Now, the stock that I wanted to put it into was an experiment, is what I called it. One that logic said it shouldn't really do well, but I just had a feeling. And I had to hunt around to find one. And I found 3. Now, the one I bought, and I bought all 3, by the way. One of them I bought, I only put in $100. And in the last 30 days, it's gone up 40%. Now, the other 2 that I bought, one went up like 3%, let's see, it was $3. So it probably went up about 10%. And then the other one went down maybe 1%. So we've got some steady things. We've got a solid blue chip, and then we've got 1 or 2 experiments on each account. That was our strategy up to now. A couple of days ago, I decided, because my dollar cost averaging time is coming up on the 1st of the month, and I decided, well, I better start doing some research, see if I can find myself another growth stock that I can put money in. And I got to tell you, I looked long and hard. They are now hard to find. Now, I did buy one, and that's the one that went down like 1%. But they're really, really hard. They're not near as easy as they were just a month ago, much less 5 or 6 months ago. So at that point, I went ahead and made the purchase, and I decided, well, I can always, I mean, even if it goes down, I can always pull it back and put it back into my blue stock account and have the cash there still available. In the meantime, the rest of my growth stocks have been doing great. We're still at between 30 and 35% on a regular basis. We've got another at least $1,000 ready to pull out, and we don't even have 5,000 in the market yet. So we've already pulled out 1,000. We're getting ready to pull out another 1,000 for a total of 2,000. Wow. But when that happened, I realized that that method has changed. I need to now go back to traditional investing to protect what I have. Now, what has not changed is dollar cost averaging. We are still going to do that every month, no matter what the market does. The dividend investing is where we're going to go. We are not going to chase growth stocks anymore. Now we're going to be chasing dividend stocks. And blue chip dividend stocks are pathetic. They, to me, are like anything else. If you throw enough money at it, you can do well. But why do I want to throw $250,000 at a stock to make $300 a month? That to me is silly. But on the other hand, why do I want to put $1,000 at a stock that'll pay me 10% but will be out of business in 3 months? That's silly also. So the art, and I want to emphasize that, the art of stock picking, and not the science, because it is not a science, but the art of stock picking is to be able to find a stock that will meet your needs at your time, at your price, with the amount of risk that you're comfortable with. That requires a lot of knowledge, or a lot of thought, and a lot of research. Now, one thing I have done is the cash that was in my blue chip stock. I took that down to almost nothing, simply because I wanted to build a mutual fund. And it worked. We're doing very well. But I think going forward, because in my opinion, I think the market is going to go down rather quickly. And when that happens, I want to be able to have enough cash to go in and pick up real bargains. So I think what I'm going to do is I'm going to worry less about the mutual fund, and I'm going to start keeping more cash in Robinhood on my blue chip stock. Now I say stock, why? Because there's only one designated stock where I have put all of the profits. My money has not purchased any stock on that blue chip. Everything that I buy on that blue chip is strictly from profits from other stocks. That way that I know that whatever that stock does, that is all free money. That is all profit. When I do an experiment, when I buy an off-the-wall stock, I'm going to do it straight out of the profits. If it crashes, it wasn't my money to begin with. It was just an experiment. If it makes money, then we take the money and we put it in and we decide what to do with it then. So I am still going to keep one experiment going at all times if I can. If I can't find one that makes sense and kind of makes a possibility, then I'll just keep it in cash and we'll just wait till one comes up. Now, one other caveat that I'm doing to the new strategy. I am not doing any DRIPs, direct reinvestment programs. Now, a lot of the dividend investors will poo-poo on this. But let me tell you why. Let's say that I had $100 in dividend from ExxonMobil, as an example. Their stock is running at $55 a share as we speak. And I'm going to receive, I have, I think 5 shares, I'm going to receive $4. But let's say it was 100 just for the sake of argument. Their dividend payout is around 3.5%. That's a lot better than banks, and I agree with that. But the experiment that I told you about is doing 35%. Every other stock that we have, if you average them out, is doing 34%. So why would I allow $100 to sit there making 3.5% when I can have that money put into my cash account and take that cash and go make 35%? Now, the trade-off is security. I understand that ExxonMobil is not going bankrupt, and I don't know that the other companies won't, and I agree with that. However, if you do your research, and the company has been in business for 30 years, and they've paid dividends every quarter, and they had a big downturn on March 13th, 2020, and they're coming back. Why would you not put your dividend money into that stock instead of into ExxonMobil that's 3.5%? So that's the tale of two strategies. The first one was aggressive, and we took advantage of an opportunity, and it was an unorthodox way to do things. Now, I understand that there are people out there still chasing that, and they will still make it, and I get that. But I also know that the last time I did that, it was very, very hard to find one that was going to show promise. And everybody else is running into the same thing. So, as a savvy, semi-savvy investor, I realize that being the contrarian right now is the way to make the money. Everybody else is chasing profit. I'm going to chase dividend. And frankly, I'm going to consolidate my positions on several stocks. The one that is doing 35% the experiment, I'm going to put more money in. The other two that basically mark each other out, I'm going to sell both of them. And we'll find out what we're going to do with that. I don't know. Am I going to ignore the mutual fund? No. I will probably take some of the profits and put it into the mutual fund, but I'm going to leave a lot more this time in the blue chip so that we can take advantage of any opportunities that come along, because I think the more the time goes on, the bigger chance there is for more opportunities. So my advice to you is not to make drastic changes, but I would slowly but surely build up my cash reserve so that when the stock market goes down, and it will, it's not a matter of if, it's a matter of when. And when it does go down, as it goes down, as your dollar cost averaging, go searching for the best purchase deal you can on the way down. And that's my new strategy. We went from growth stock to dividend stock. We did great in growth stock, and we could probably still do it if I wanted to stay there. I just feel like the time right now is to prepare for the coming storm, and this is just the first step, and I wanted to share that with you. If you feel the same way, don't do anything drastic. Keep your good investments where they need to be. Consolidate any borderline or experimental purchases that you have, and continue to do the things that you have done, but along the way try to increase your cash reserves. Well, that's a tale of two strategies. You guys have a great week, and Happy investing.